there could be opportunities on the horizon, but for now, I'd say closed-end fund investors remain cautious. So over the last few months in the closed-end fund space, we've seen a definite kind of, I'd say, bifurcation between the fixed income-oriented funds and the equity-oriented funds. On the fixed income-oriented funds, the funds that have the positioning toward higher interest rate risk, so longer duration and higher credit risk, have seen the best total return performance on their portfolio basis. So, segments like the national municipal beyond investment grade, I call them. They invest in, not just investment grade credits, have performed the best among the national municipals. And then on the taxable side, we see segments like the Build America bond funds, which by definition almost have very long durations in them, have performed well, as have the preferred securities. On the equity side, the funds have been doing quite well. In fact, the U.S. large cap covered call funds have actually performed the worst out of all the segments that I've looked at, despite the markets hitting highs. That's on a NAV basis. On a price basis, they've been performing near the best, which has set up quite a discount, narrowing of the discounts on average in there. But in terms of the best price performance over the last couple months and the best NAV performance over the last couple months, it's been the MLP C Corporation closed-end funds that have had the best performance. Investors seem to be skeptical about taking on interest rate risk, given the uncertain market environment that we're in. So what we've seen is among all the taxable credit segments and the municipal credit segments that I look at, we've seen steady to deteriorating discounts, average discounts, over the last 3 months, say. On the equity side, it's quite different. With the U.S. markets continuously hitting new highs, the average discount trend for all the segments on the equity side that I look at are steady to improving. One trend is within the municipal space. So despite all market prognostications at the beginning of the year, we are seeing actually some municipal funds starting to increase, even just slightly, their distributions, and it has a lot to do with refinancing activity on the leverage. So they're refinancing at lower rates, and they're able to pass that savings on to their shareholders in the form of higher distributions. With all the talk about the uncertainty with interest rates, with all the talk about, are we in an equity bubble, I think that what that portends for closed-end funds in the next 3 months to the remainder of the year, it could be some, if there is a market dislocation, if there is a pullback in the equity markets, I think that could set up some very interesting opportunities for closed-end fund investors who are patient and wait for that discount to get to abnormally wide levels before they jump in.
For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.